Just before we get into this video, I want to announce that I recently launched my own mentorship. This has everything you need. It's 2 packages. You can choose which one suits you. The first package is the basic one. It has daily videos. Yes, daily videos, simple, time-efficient videos. I won't be wasting a lot of your time. As you might have noticed for my YouTube videos, everything I do is in simple, easy to follow steps. The only thing you need to do to become profitable is to follow these simple steps. Like it says here, a simple step-by-step guide on becoming a profitable trader. You'll get everything else that's on here, even the MMP, the money making pyramid. Every week we talk about one single topic. Everything is very structured. It's everything you need to become a profitable trader in simple steps. And it's not like a one-time course. You'll have new videos every single day. Now, for the premium package, it's everything you need and more. And this is to get you even faster to your goals of becoming a profitable trader. This is something I was missing in my journey. And if I had this in my journey, it would have been a massive shortcut to profitability. In this community, we are focusing on the most important thing, and that's making money. Everything the basic package has, plus full one-on-one support, the best in the industry systematic psychology plan. I can guarantee you it's the best in the industry. My own full trading plan, a private networking community, and even more. And the premium one works with enrollments. The basic is always open. The premium one will have very limited spots. And lastly, I wanted to show you some reviews of what the current people that are enrolled in premium think about the program. Easy to follow, simple step-by-step guide to get you to become a profitable trader. Hello everyone, hope you're doing all right. Welcome back to this new video. Happy to have you here. So today we are going to look at which fair value gap to use and a breakaway gap. This video was a request submitted via the forum in the link in the description by this man right here. You can check him out on Instagram. Thank you very much. I'm sorry, I'm not going to try to pronounce your name out of respect. I don't want to butcher your name. Alright, so thank you very much again, and let's get right into it. A breakaway gap is a gap, a fair value gap that's left unfilled. For example, this right here is a breakaway gap. Now, obviously the question arises, how can we spot beforehand when a breakaway gap will happen? And then the next question arises, which fair value gap do we use? Especially if there are 2 fair value gaps, which one do we use? That's why I have some simple tricks and some simple steps to help you to recognize a breakaway gap and to help you choosing a fair value gap. The first step is first line of defense, aka overlapping. The next thing is momentum, time, drawn liquidity. I'll go over both of these, but let's first start with first line of defense, aka overlapping. So let's assume this was our drawn liquidity right here. We tapped into it perfectly. So let's first take a look at the buy side. Here we are on the buy side of the curve to the draw on liquidity. Now, if you take a look at every fair value gap right here, what do you see? You see a first line of defense. Every fair value gap that got respected and traded into has an overlapping discount array. So what do I mean by this? If we are trading lower here, we are taking out sell side liquidity, price pushes higher, a displacement higher, market structure shift, etc. Then this right here becomes our breaker. This breaker is our first line of defense. It's the first discount array we are meeting if we are retracing, and this line of defense is likely where we are going to push higher. Now, if you also noticed, we have a little fair value gap right here. Can we expect this fair value gap to be traded to? In hindsight, obviously, no, we are not trading into the fair value gap. Why is this? Because we have this first line of defense here. This breaker is already supporting price. So obviously in real time, we might have seen this fair value gap overlapping with this breaker, but we are keeping in mind, we already have this breaker. We don't need to come back into this fair value gap right here. So if we go on to the next example, what do we see here? An order block overlapping with a fair value gap. Here we only have a fair value gap, not overlapping with something clean. So if we have this order block, what's our first line of defense? Well, obviously we have this fair value gap, but this fair value gap is overlapping with an order block. So what does that make? Order block plus fair value gap equals 2. So you have two defenses right here, this fair value gap and this order block. Now, if we only take the fair value gap, 1 plus 0 equals 1. I made it stupidly simple right here, but this is just to get my point across. Here we have 2, double the increased odds of it reaching this and this holding. So, if you notice, there's a little small fair value gap as well in here. Now, especially with the momentum and with the drawn liquidity that we currently have, could we expect price to come all the way back down here and then go higher? Probably not. Now, I'll touch on the momentum later in this video, but again, you see the first line of defense, this order block overlapping with a fair value gap, and then this becomes a breakaway gap. Then if we go on to the next one, we see we have this breakaway gap. Now we have the same exact thing. We have this order block right here, which is our first line of defense. Meaning, if price wants to go higher, this is likely our first line of defense. So if price wants to go higher, we're likely expecting it to go higher from here. Now, what are the overlapping fair value gaps? We have one right here, which is perfectly overlapping with this. And we also have a fair value gap right here. If we already have a perfectly overlapping fair value gap right here, do we expect price to trade down into this one? Obviously, again, in hindsight, no. In real time, we could maybe see a slight sting into this fair value gap and then a rally higher. This is our first line of defense. Same goes for this situation. Here we have a breaker, which is our first line of defense. We come into it. We do not have a clear breakaway gap. The only fair value gap we have is this one right here, which is overlapping with this breaker. Now, again, here we trade down, we take sell side liquidity, market structure shift, displacement higher. We have two fair value gap right here, two fair value gaps. If we trade above this, what's our first line of defense now? This breaker. What do we have as well? This small fair value gap right here. Let me zoom in a bit. This fair value gap right here, overlapping with this breaker. So that makes 2. That's our first line of defense. So if this is our first line of defense, do we expect price to retrace all the way back down here to fill every fair value gap and then continue higher? No, especially not with the momentum and drawn liquidity that's to the upside right now. Now, next thing, again, same process. Here we have a fair value gap. Here we even have an order block and this fair value gap. Now, first line of defense, this order block right here, overlapping with this fair value gap. What can we expect? A possible retracement into here. It retraces even down further into this order block, but it doesn't fill in this breakaway gap. Why? Because the first line of defense is here. And then it becomes interesting again, because we reach our drawn liquidity, we come back down, we have this big fair value gap, and then we have another fair value gap right here. Now, what is our first line of defense? Possibly some breaker right in here. Now, because we already traded below these breakers right here, this becomes our first line of defense, which is overlapping with this fair value gap. If we didn't trade so low right here, and we were still above this area right here, and we only had this fair value gap, then I would have likely expected price to come into this breaker right here, and then this wouldn't have been a breakaway gap. It would have likely done something like this. But because we already traded so low, I won't expect an immediate retracement into here. I want a quick momentum shift, first line of defense, overlapping fair value gap, and then a move lower. So again, you might see it now. You might start to see the overlapping fair value gaps with old reclaimed order blocks, old breakers, etc. Every premium array in the sell side, every discount array on the buy side that's overlapping with a fair value gap. Then we can expect this fair value gap to get traded into and then continue lower. Now, why does this exactly work? Well, if you think about it from a liquidity standpoint, the central banks are offering liquidity to big institutions. So if they are offering liquidity, central banks are already short in here because every institution is mainly a trend follower. They see this trend, they are trend following, they want to buy at every fair value. So if central banks are offering liquidity, they are short right here. Since they are short, they are either distributing or accumulating new short orders, they are taking them off, etc., to potentially drop prices even lower. So this becomes a resistance level. Now again, a last example of the first line of defense. If you take a look at this situation right here, we have 3 fair value gaps. Which one do we choose? Which one is a breakaway gap? Well, what is our first line of defense? This breaker right here. This is why this fair value gap is holding. This breaker is overlapping with it. This is the first line of defense. Now in real time, obviously we could see it spike up into here, but to spike it up all the way into here and then continue lower, especially again with the momentum and clear drawn liquidity, then it becomes low probability. So now let's go on to the daily. So this is the same price action we saw on the 4 hour, just the daily. Again, we had this drawn liquidity for the buy side of the curve. You can see even how fractal this is because we have this fair value gap overlapping with this breaker. So this fair value gap and even this fair value gap remains open. So now let's study the momentum, time, and the draw on liquidity. Let's say for obvious reasons, our draw on liquidity is right here. If our draw on liquidity is right here, let's study this price action right here. Now, as you might have noticed, if there's a clear draw on liquidity there and there is momentum in the market, price will waste no time to get to that draw on liquidity. So if we were to choose a fair value gap on this buy side of the curve, let's say we are here, we wouldn't expect price to come all the way back down here and then continue higher. No, if there's a clear draw on liquidity and there's clear momentum, we want the nearby fair value gap that's overlapping with another discount or premium array, aka the first line of defense. We want to see that first line of defense overlapping with a fair value gap hold. Now, what do I mean by this? If we see this, what's our first line of defense at the bottom? We have this breaker right here, overlapping with this fair value gap and this fair value gap. Now it retraces a bit far down. Then we move away again. What's our first line of defense right here, aka the first support? This area right here. Now, as you can see, price has a lot of momentum. It wants to get to this draw liquidity very fast. If price is moving very fast, we have this fair value gap right here. And we have this first line of defense. Can we expect price to come all the way back down here to fill in this fair value gap and then continue higher? No. That's not something I would want to see. I want to see price move higher with displacement, with a clear momentum and a clear target. If price were to come all the way back down here, I would have likely expected lower prices instead. Now, if we follow price action right here, you can see it only retraces a little bit and then pushes higher again. Now again, same story. First line of defense becomes this. Price leaves this breakaway gap. Now in hindsight, it's a breakaway gap. How did we know it's going to be a breakaway gap? We had this first line of defense. This up candle was our first support area. So what you see a lot of the time is that price, and this is all fractal, price moves above this up candle and next day it retraces a little bit just like this, and then this will act as support and it will continue higher without later coming into this breakaway gap. Now a breakaway gap will likely stay open until the drawn liquidity is met, aka this high, and then later on it could come back into the breakaway gap and then fill in to potentially go higher or go lower again. So here for momentum, time, and drawn liquidity, the time, obviously the sessions. If we are coming into a daily fair value gap in London open, we can expect an immediate push away. And for the momentum, we have to have a clear drawn liquidity. Let's say our clear drawn liquidity was right here. Do we expect price to come all the way back up into here if there's clear momentum and then drop off? No. We have this previous day high, the sweep of the previous day high into this established fair value gap and immediate rejection away. And you can see once we have our drawn liquidity and we start filling in fair value gaps completely, once our drawn liquidity has been met, this is very suspicious. Why? Because if we are filling in fair value gaps completely, then that indicates there's no momentum to the downside anymore and price might want to go higher. As you can see here, momentum is still bullish right here. So we only tap, we sting into the fair value gap and then push higher. Here, once we trade higher, we have this fair value gap. It fills in completely. So the fair value gaps tell you a story. If the fair value gaps are getting filled in completely like here, then the momentum might switch to the downside again. And as you can see here, only a little sting into the fair value gap and then a push lower. And this happens a lot as well. Here, drawn liquidity, clear drawn liquidity on the lows. All right, only a little sting into the fair value gap and then continue lower. Here, fair value gaps get filled in completely. This might be a switch in the trend. Here again, a little sting into the fair value gap and push higher. Here we have an overlapping, aka the first line of defense, so it might not even fill in this fair value gap. Here again, fair value gap with this order block pushing higher. Here again, a little sting into the fair value gap and then pushing lower. You can study this by your own. Just by listening to me explaining it won't help you. Obviously, I set out the foundations, the easy steps, the first line of defense, aka an overlapping discount or premium array with your fair value gap, and then momentum, time, and draw on liquidity. Study this by your own and then it will start to click. I can guarantee you that. If you only watch me do it, you won't reach your full potential. If you go study these simple steps, first line of defense, momentum, time, and draw on liquidity, you will start to see things and you will form your own edge. And I can 100% guarantee you that. So I hope that made sense. I hope it was insightful and I'll see you at the next one. Thank you.